Well, on the subject of oil, our guest today is Viktor Katona, lead crude analyst at Kpler. Victor, thank you so much for joining us today. Firstly, how will the recent announcement on releases from the strategic reserve by the Biden administration affect prices?
Well, it's definitely a depressionary effect. One might even say that it's a deflationary shock for oil prices. Uh, I mean, the kind of inadvertent nature of the sale and the somewhat unexpected release of 26 million barrels per day into the market, the first effect that it will immediately have is to depress WTI. So the difference between WTI and all the other benchmarks will only get aggravated, meaning that there will be a huge arb of American crude going either into Europe or into Asia. Considering that we're right now in a period when freight rates are not that particularly expensive, it's pretty much a no-brainer for anyone who likes to buy light sweet to go for the American market. And the only reason why this is happening is effectively the US SPR release. So what this creates is a discrepancy between the benchmarks. It aggravates it, and it creates new trading routes for American crude and for its exports.
Turning to the Russian oil market now, it's been under sanctions for almost a year. How is it faring? Are they able to find new buyers in Asia? And what are the continuing effects on global prices?
Up until now, I would say that it has been pretty much the status quo ante. Production has been relatively stable, despite some shaky period in the spring of 2022. But looking into the future, and particularly in February, March 2023, the period that we're living, the production cut is already taking place. And even though oil export will not be that much impacted, because we think that oil exports will remain, it's pretty much the refining and the oil exports that will suffer. I mean, we already see them suffering, and the 500,000 barrels per day drop that was announced by the Russian authorities recently is already seen in product exports over the past couple of weeks. So it is definitely taking place. The same success story that they've had with oil when they've managed to replace Europe with India, that has so far failed to materialize on the product market, and specifically into diesel. There are some new routes, North Africa or Latin America or West Africa for that matter, but they're not enough to fully supplant the entirety of Europe. So they're still waiting and seeing whatever is happening.
Hmm. China seems to fully have abandoned its zero COVID policy now. In the coming year, what do you think that will mean in terms of consumption? Will it go back to pre-pandemic levels or even exceed them?
Should exceed them, should definitely exceed them. I mean, China right now has a much stronger downstream capacity than it used to have 3 years ago. The fact that it never really lived up to its potential is only a reflection on how stringent the zero COVID policy was. But now that it's unseen in government policy, and it's unseen in the way market participants are actually acting on the market, how actively they are buying. We think that 2023 will be the year of growth for China, and China will effectively lead global growth. It will have its ups and downs. For instance, spring maintenance in China will be strong, so there will be an interruption. But February 2023, so this month, is already almost on par with December 2022, and we thought that was going to be the peak. We are almost there, and because the domestic consumption is very robust, we will surpass pre-pandemic levels pretty soon, and the summer will be very, very strong.
Finally, looking ahead to OPEC Plus's 2023, there are some production problems in the pipeline. What's going to happen?
I mean, effectively, for OPEC plus caution and a cautious optimism going forward was always the key word. They don't want to overdo the market discipline that they have managed to maintain. And if one is to talk with OPEC Plus representatives, pretty much everyone expects the current status quo to remain throughout 2023. They don't want to have drastic decisions. They want to avoid supply disruptions, and they want to maintain the current pricing level for as long as possible, because it's pretty much above everyone's fiscal break even. So they are cautiously optimistic, not doing any dramatic changes, and just looking forward and reacting if something extraordinary happens.
Viktor Katona, lead crude analyst at Kpler, thank you very much.